Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Narayan hrudalaya. Is it a buy at these levels or what needs to be done from a long-term point of view? So let's get started. First of all, a disclaimer that this is not a stock recommendation and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Narayan hrudalaya, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel. You will also ask me questions in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up on short-term, long-term call. And also, you can ask me queries on a daily basis. One query a day, and if you can pay $100 upfront, then you get 1 year access by paying for only 10 months, so that's a 20% discount. For detailed market or company talk, you can directly email me and we can work things out with a fee. Now about the company. Established in 2000, Narayan hrudalaya provides medical and hospital services and a rising hospital brand in India. So one of the, you can say, new brands that has risen across India, over 5,000 beds across most part of the country. They also provide diagnostic and daycare services, but not at the same percentage levels as other hospitals. So mainly, their business is into critical care. Market cap of the company has risen from 10,000 crores, and it is now around at 13 to 14,000 crores at the moment. So it was 10,000 crores when I made the presentation, as I am now recording the video just before you can say uploading it. The market cap has risen to 13 to 14,000 crores. If you look at the financials, and these are Q4 FY21 numbers, so sales have gone up by 15%, but look at the profit growth. The profit growth has been exceptional at 68 crores versus 12 crores last year. And if you remember, during Q4 there wasn't that much demand. It was Jan to March 2020 that we are talking about, and the demand escalated from April onwards. So most of the companies lost out, most of the businesses lost out during the pandemic, but hospital and you can say medical related any kind of business really proliferated, and Narayan hrudalaya is no different. So it gained a lot of you can say momentum. Return on equity improved to around 6%. Operating profit margin is around 13%, which is decent. And so that momentum is being seen in the profit growth that it has earned in that you can say in that period. And from say April 2021 onward, it continued in the Jan March quarter as well, and so the difference here. And I think the April to June quarter would be even better than what we are seeing at the moment. So there is a hope that the momentum may just continue. If you look at the performance, then stock has surged in the last 12-15 months. So it nosedived in the Feb March fall of 2020 when it fell 40%. Everything fell. In fact, the market fell 38%. So it probably matched the market, but have been an outperformance since then. Plus, there has been, you can say, occasions where you can say from April onwards, the company has done, the stock has done exceptionally well with the surge of around 40-50%. So from April onwards also it has done very well. Results have been very robust, and there is high promoter and institutional holding, which is a big positive for anybody investing into the company. It is a clear play on the current situation that we are facing and the pandemic. So I feel that in the next 18 months the momentum may just continue, although the trajectory of the move may not be the same as before, because most of the things are priced in, but I still believe the returns could be very decent even from these levels. So, what is the current scenario? Lifestyle change should help hospitals. So, people are changing the way they are, you can say, looking at illnesses, looking at their health. And this kind of a change will help most of the hospitals, as people would be looking for more regular checkups, etc. And we may see some dip in numbers in the short term. So, I'm not ruling out that this June numbers will not be the same as the last June numbers, and the trajectory in the numbers might dip, but the stock may not fall because there is a, you can say, a longer term change in the type of, you can, the way people look at hospitals and work towards it, work towards their health. It's a long term sustainable revenue stream that we are looking at. Looks very likely as people have become more careful of health. So there would be, you can say, over a 5 year period, if you look at the numbers of people or footfalls coming into the hospitals, it would be greater now compared to 5 years ago with the kind of pandemic we have faced. So may have run up for the moment. I'm pretty sure that around 500 it is expensive, but everything is expensive at the moment at 16,200 on the Nifty. But what you can do is buy incrementally on very bad days. Whenever market falls 4-5% in 3-4 days, then that's when you can look at. So things could become better once scenario normalize. So see, what will happen is numbers may become less and the stock may not go up in the manner it has done. So the returns may not be the same, but the stock will continue to perform over the next 18 months. If you look at the technicals of the stock, there is strong support around the 460 levels. Currently, it is around 495, 500, and short-term support is very nearby. In fact, around 492, 494, there is a strong support. The stock closed right around there. So once that is taken out, we are looking at 460, but it looks extremely strong on charts and something that one can buy for a short term trade also with a stop loss around 450. But the major up move would be seen above 550 levels. It may consolidate in the next 3-4 months. That's my opinion here. So what needs to be done? I would say better investment plays available, but one can definitely look at investing into this stock. So there could be a, you can say, a split decision here. I cannot say that you cannot invest here because next 18 months could be extremely good. But if you're looking for 3 to 5 years, then I feel the returns may diminish going forward, because once things open up, once everybody realizes that the pandemic is virtually over and things are normalizing, because I believe if not by December, but next July, August, in 1 year's time, most of the population would be vaccinated. So things could become much better then. So beyond 18 months, I don't see the stock really performing. I don't see that most of the hospital stocks, most of the you can say diagnostic larger companies, companies which are into this sector may not perform that well after 18 months. So if you have a time frame of 3, 5, 6 years to probably get into sectors which are in difficult shape at the moment. If you have a 1.5 year time frame, yes, you can buy here, as I have discussed about the levels and the technicals, and probably make money. So you can take your call according to your, you can say, time frame. So wait for decent declines to buy. I think the run up has already taken place. 450, 460 would be very ideal levels to get into. So this was my video on Narayan Hrudalaya. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.